This is our third video on posting journal entries to the general ledger and then creating a trial balance from the ledger. This problem is from Chapter 2 and it's our second question. Post the below journal entries prepared into T accounts. Assume that the opening balances in each of the accounts is 0. Prepare a trial balance from the ending account balances. If you'll look closely, these journal entries are from the second video we did, Chapter 2, Question 1, so they should be familiar to you. So over here we have our general journal from all the journal entries we did in our second video, and now the next step in the accounting cycle is to post into a general ledger. And within a general ledger is where we have all these T accounts. And basically the general ledger holds all the accounts that a corporation has used. So what we'll do is we're going to post each journal entry, and then we're going to add up the debits and the credits to get an ending balance for each account. So let's look at our first entry here. We have cash that was debited $325,000, common stock credited $325,000. So it's simply a matter of putting a debit into the T account for cash. It's good to number it with the number of the problem or the date if the date is given. So we got $325,000 debit, and down here at common stock, $325,000 credit. Our next one, we have equipment, $36,000 debit, cash, $12,100 credit, note payable, $23,900 credit. So we'll post those as well. So we have equipment down here, a debit for $36,000. We have cash going down, $12,100. And then we have the note payable, which is a credit, $23,900. Okay, our third entry, we have inventory, $97,000. Accounts payable credited, $97,000. So we have inventory here. We'll give it a $97,000 debit. Then we'll come down to accounts payable and credit it $97,000. Number 4. This is our large journal entry with the sale of inventory. So we have accounts receivable and sales, and then we have cost of goods sold and inventory. So let's go ahead and post those. We have accounts receivable first up here for $150,000. And sales right below it for a credit, $150,000. We have cost of goods sold, which is going to be a debit, $75,445. And then last, we credit inventory for that amount as well. Our next entry, we have rent expense and cash. So it tells us we have a debit for rent expense, $4,400. And we credit cash to decrease cash, $4,400. Next, we have prepaid insurance and cash. Make those postings. Prepaid insurance, $5,100. And we have cash being decreased again, $5,100. Number 7, we have accounts payable, $75,000, cash, $75,000. So accounts payable is being decreased with a debit, $75,000. And we are also decreasing cash with a credit, $75,000. Okay, number 8. Again, we have cash being increased this time, accounts receivable being decreased. So we'll increase cash, $68,750. We will decrease accounts receivable for that same amount. In our last entry, we have depreciation expense 1,100, and then the credit to accumulated depreciation 1,100. So we'll post those. Our credit to accumulated depreciation 1,100. So after you've done that, you'll want to add up each of the accounts and find the difference. So what I'm saying is take the total debits here for cash, your total credits here for cash, take the difference of the debits minus the credits, and that will give you your ending balance. With your assets such as cash, inventory, and accounts receivable, you should have a net positive on the debit side, and then for liabilities and equity accounts like common stock or accounts payable as a liability, you'll have a net positive on the credit side. So go ahead and add all those up, and I'll have the ending balances posted on the next slide. Okay, so I posted the ending balances for each of the accounts now, so take a look and make sure that you got all the right balances. Most of them were very straightforward, such as common stock. There's only one transaction, so that's obviously the ending balance. The only ones you really had to do work for were cash, inventory, accounts payable, and accounts receivable. So now that we have our ending balances, what we're going to do is post them to our trial balance. So the trial balance is a listing of all the accounts the company has used, and they're listed by assets, then liabilities, equity, and then temporary accounts like sales and expenses. So it's very straightforward. All you're doing is taking the end balance and posting it to the account. So we know cash is a $297,150 debit. So that's what we will post under cash on the trial balance. Accounts receivable, we see we have $81,250 as our final balance. Post it again to debit. So I'll let you finish up the rest of the assets. Let's look at a liability real quick. It's accounts payable, $22,000 credit balance. And we have a note payable, $23,900. Our equity account, we only have one common stock. That's also a credit account, $325,000. And then we'll have our temporary accounts like sales and our expenses. Sales, we had a credit of $150,000. And we have cost of goods sold. That is $75,445, one of our expenses. I'll let you fill out the rest of these temporary accounts as well. So go ahead and pause the video, fill out the rest of the account ending balances, and then we'll look at the totals. Now that we have all our numbers here, we'll want to add up our debits and credits and look at our totals and make sure they match. So if you added all these up, you'll get $522,000 for debits, and the same thing for credits as well. If you did not get the right amount whenever you prepare a trial balance, it's good to go back and look at the journal entries you made. Perhaps you made one incorrectly or you posted something to the ledger wrong. But if you've gotten the debits equaling the credits, then you've done your trial balance correctly and you've completed it.